Welcome back to Halftime. It's time for our calls of the day. Let's start with Netflix. Benchmark reiterates its sell rating. Weiss, you own it, and you're trimming your position on this one.
Yeah, again, this is one of the ones I was waiting for this year to do. And it's purely a portfolio, management call. I love the company. I love the fact they still have so much pricing power that they're doing more and more in sports, which will bring more subscribers there. And then they will raise prices. The ad model is going well. And their only competition, well, actually, they don't have any real competition. So that's why I like about the position. Stock has done very well, as we all know. Position just got way too big to be responsible. Still one of my largest positions, if not my largest.
Kevin?
Yeah, I mean, the analyst calls nonsensical to go from 555 to 720. It's silly. Third quarter revenues were up 15%. Net income was up 41%. They report January 21st. They're going to crush it again. WWE comes to Netflix Monday night, so get ready, Jim.
Oh, I'm so excited. I'm just kidding.
I can't wait to see
really
Jim in one of those little bathing suits.
I show up as a masked crusader.
There you go.
I protect my anonymity.
You're going to have to need some kind of special name for
I have
all
a feeling
of that.
people will be able to tell it's you.
I'll give you that one.
Yeah.
But sports though, to be
Sports
serious,
in general. You had the Jake Paul, Mike Tyson experience. You had Monday Night Football. Excuse me, Christmas football.
Yeah.
They haven't really figured out how to completely monetize advertising, and when they do, this thing's going to be a juggernaut. And to Steve's point, you can charge us anything. We're not going to get rid of Netflix.
Yeah, that's probably true. Diamondback Energy upgraded to outperform from pure perform at Wolf. It's also named a 2025 pick. Price target at 190. Bryn, you own this one.
Yeah, I mean, Diamondback is one of the best of breeds in the energy space. It sold off along with the rest of the energy complex in the fourth quarter of last year. But I think you have great execution from the C-suite. You have capital discipline. They're in the right spots. And so I think in the energy space, this will continue to be somewhat of a darling of the energy companies that asset managers want to own.
Steve, in energy, what are you thinking about for this year? Such a loser previously.
But what about energy?
I thought that, but I didn't say it.
Sorry, Steve, that was low-hanging fruit.
It's all right.
You would have taken it if the positions were reversed.
Here's the thing. Even if he says something funny, his delivery is so bad, you can't tell if he's talking about Cleveland Cliffs again or me. So here's about energy. I've not been an investor in energy, but I do keep coming back and looking at it. Constellation, with the nuclear deals, I do think I am a proponent of nuclear. It's much safer than it ever was. So I'm just trying to figure out where to go on it. Nat gas looks interesting, but they've already moved. So to me, commodities are just so hard, and they are the ultimate trading stocks. I'd rather not, continue to trade them. If you look over any 10-year chart, particularly last 10 years, they're basically flat across the board. So you definitely have to trade them. I'm looking. I continue to look. I can't guarantee I'm going to do anything in it.
Brent, you have a thought there?
Yeah, I mean, I think where Steve's not wrong there. I think there's certain names. We really like the mineral rights spaces in both the public and the private markets, but you definitely have to pick your spots. I mean, I sold Devon last year, and that stock's been negative for 2 years. And so when you think about allocating capital, I think you really have to get company specific or stick to the private markets where I think the returns are more stable.
Okay. So TJX named an off-price winner at Wells Fargo. It feels like, Kevin, it's almost always one of those names that analysts are calling out in almost any kind of economic environment. Off-price seems to be in vogue. Do you agree with this call?
I mean, 100%. I agree with TJ Maxx, both in strong economic times as well as a pullback. $4.4 billion. Record free cash flow. Earnings per share were up 11%. Revenues were up 6% in the third quarter. Management guided higher for the year. The only thing I would disagree with about this call is I don't think the price is high enough.
Oh.
115, the stock's 120. So
Sure.
if it's the fourth quarter that they're leaning into, maybe the price target should be a little bit higher. We love the name.
Yeah, fair enough. It almost always comes up as a winner. I feel like when the analysts are going through their calls, no matter what the economic environment. Dell is another one, top pick at Bernstein. Bryn, you're in this name. Obviously not one of these big core Magnificent Seven kind of tech names, but still, you've got ownership.
Yeah, I think what this name, like an Oracle, is what's old is new again, and their infrastructure services group is really the key point, the key section of the company that's driving, double-digit returns. So keep an eye on that. I think it'll be another strong year for Dell as the infrastructure continues to get built out in the AI data centers.
It's interesting here, Bernstein sort of notes that they see the stock as attractive in the 110 to 115 range, which ascribes little to no AI premium.